Have you ever wondered if that shiny red car you love could secretly cost you more in insurance? Picture this. Same car, same driver, just a different paint color. And you're paying extra. That sounds wild, right? I'm Morgan Lane, your safety-first car guy, and you're watching Recall Roadmap with Morgan. Today, I'm busting the red car myth with data, not guesses. Surveys say it's no small rumor. About 46% of drivers think red cars cost more to insure. Another poll puts it at 44%. That's nearly half of us carrying the same belief into renewal season. Before we dig in, a quick note. Your premium is the amount you pay for insurance coverage each month or year. It's built from risk, not vibes. And yes, I dug through insurance surveys and expert interviews to get the truth behind this rumor, so you don't have to. What color is your car? Do you think it affects your premium? Keep that answer in mind as we go, because the numbers you'll see today may surprise you and might even save you money. So, is this red car thing real or baseless? Let's start with what people actually believe, then press the pros for answers. Here's a curveball. The red car myth isn't a fringe idea, it's mainstream. Do drivers really think red cars cost more? According to national surveys, yes. One found that 46% of Americans believe insuring a red car cost more. Another survey clocked it at 44%. That is a massive chunk of the driving public. It even ranks high on lists of top insurance myths. So, if you've heard it from a friend, a dealer, or your uncle who knows a guy, you're not alone. I've seen this play out in workshops and in Q&A sessions with owners. People repeat it because it sounds logical. Flashy color equals flashy driving, right? But belief isn't proof. Charts and polls show how common the idea is, not whether it's true. And in my work, I've learned to follow the paper trail, applications, rating factors, and how insurers actually build a price. So I checked multiple polls and industry write-ups and kept seeing the same pattern. Lots of belief, no math. The big question now, if so many drivers think color matters, do insurers admit it? Time to go straight to the source and ask what they really use to set your premium. Could your insurance agent be hiding a secret color surcharge? Short answer, no. I went line by line through insurer statements and applications. Color doesn't show up. Insurance pros say it clearly. As one consumer guide puts it, a red car will not be more expensive to insure, even though many people believe it. Another expert, Christopher Kirshen, gets blunt. The color of your vehicle is not even a question on the insurance application, and it is a non-factor. That matches everything I've seen in practice. Think about what insurers actually track. They use your vehicle identification number, the VIN, to identify year, make, model, engine, and trim. The VIN doesn't list paint color. Why? Because insurers price risk based on who's driving, what they're driving, and where it lives and travels, not the paint. That's how these companies keep pricing consistent and defensible. Hearing that should be a relief. If you love red, go red. But it does raise a new puzzle. If insurers don't care about color, why do so many of us think they do? Let's follow the myth back to its roots and see where it picked up speed. So, why do we fear that red cars cost more to insure? It comes from a stereotype. Red equals flashy, flashy equals speeding, speeding equals tickets, and tickets mean higher premiums. In one poll, nearly half of drivers said red cars get pulled over more for speeding. That belief feels intuitive. Red pops in traffic. Many sports cars wear it proudly. The brain sees a pattern and fills in the rest. But when I chased down data, the story fell apart. Auto insurance experts and road safety writers say there's no statistical proof that red, or yellow, or any bold paint causes risky driving or extra tickets by itself. Some research notes that certain car models get pulled over more, but not because of color. In other words, it's the type of vehicle and how it's driven, not the paint. No red car quota, no secret list. Just behavior and vehicle risk. That's actually good news. Because we can control behavior and car choice. Next, let's look at what really moves your rate in the real world, your driving history. Tickets and crashes are where the math hits hard and the impact is not small. If color doesn't change your price, what does? Your record. One violation can ripple through your renewal. Here's what studies show. A single speeding ticket can raise your premium by around 22%. An at-fault crash? Roughly 42%. And a DUI? About 61%. That's not a slap on the wrist. That's a serious budget hit. In dollar terms, some state analyses found that drivers in places like California paid about $436 more in the year after an at-fault crash. A DUI often adds around $1,650 per year. I've seen owners shocked when the renewal letter arrives. The car didn't change, the color didn't change. The price did, because risk changed. Insurers price what's likely to happen next, and your past is a big clue. The most reliable discount is boring but real. Drive clean, stay ticket-free, and avoid at-fault crashes. Over a few years, the surcharges fade and your rate can settle down again. Now you might be thinking, okay, my driving matters. But does the kind of car I drive matter just as much? Yes. Let's talk about make, model, safety, and repair costs, the big factors under your hood. What kind of car are you driving? That can change everything. Insurers care about the risk tied to your vehicle. Some cars are safer, cheaper to fix, and less tempting to thieves. Others are the opposite. Numbers paint the picture. In recent market reports, average annual premiums for cars can run around $2,454, while vans average closer to $1,150. Big gap, right? On the luxury and performance side, one standout example is the Maserati Quattroporte, with estimates as high as $5,420 per year to insure. Meanwhile, modest models and small crossovers can land in the $1,400 to $1,500 range. Why the spread? Power, parts, and price. High-end cars use expensive materials, rare parts, and advanced tech that takes time and money to repair. That risk shows up in your premium. Safety helps, though. Strong crash test scores, airbags, anti-lock brakes, and modern driver assist systems can reduce losses and nudge prices down. I pulled these figures from industry comparisons so you can see the scale. If this helps you save money and pick smart, hit subscribe for more safety-first car tips. Now, the next piece of the puzzle. Even with the same car, people pay different prices. Let's talk about the driver. Besides your car, who you are matters too. Insurance is a math game, and the math follows risk. Younger drivers are still learning, and they file more claims. Because of this, young drivers typically pay the highest auto insurance rates. Over time, as you gain experience, rates often ease up. Gender can play a role as well. Across big data sets, male drivers have historically had more serious claims than female drivers. That's why many insurers charge men more than similarly aged women. In many states, your credit history can also be part of the formula. Better credit often links to fewer claims overall, so it can lower your price. You may also see small tweaks for being married, being a good student, or keeping a clean record for several years straight. None of these things have anything to do with paint color. They're all about predicted risk. When I review policies with families, this explains why two siblings with similar cars pay different amounts. One is newer behind the wheel, or has a ticket, or a thinner credit file. We've covered behavior and the person. Next up is your world, where the car lives and how far it drives each week. Where and how far do you drive? That plays a huge role. Cities bring traffic, theft, and more claims. Rural areas often see fewer crashes and lower crime. Industry guides say it plainly. Urban drivers tend to pay a higher price because of higher rates of vandalism, theft, and accidents. Your ZIP code matters. Across the U.S., average full coverage bills hover around the mid-1,000s per year, but the difference between the most and least expensive states can be more than $2,000. That's not chump change. Mileage matters too. If you drive only occasionally, what insurers call pleasure use, you'll usually pay less than someone with a long daily commute. Where you park can help as well. A garage, an immobilizer, or an alarm can cut the odds of a claim and nudge the price down. I've seen the same model cost less in a quiet town than in a dense downtown. That's not bias, it's local risk. We've covered your driving, your car, and your location. One last question always pops up next. What about custom paint jobs or rare colors? Is there any case where color touches your price? What about custom paint jobs or rare finishes? Here's the one edge case. If you add value to your car, say an expensive custom paint, a full wrap, or extra bodywork, you should tell your insurer. That way, the extra value can be insured. Experts say this is the only scenario where color enters the picture. And even then, it's not about the hue. It's about the added cost to repair or replace your custom work. The impact on your premium is usually marginal unless the customization is very pricey. Some companies offer custom parts and equipment coverage for exactly this reason. If you have it, great, your upgrades are protected. If you don't, ask your agent before you spend big at the body shop. Factory red from the dealership? That doesn't change your price versus the same model in white or black. I checked this with insurance pros and body shop folks to make sure we were clear. So, with the special case out of the way, what's the final word on red cars and insurance? It's time to put the myth to bed and talk about what actually saves you money. Time for the truth. Do red cars really cost more to insure? No. Across insurers and expert sources, color isn't a rating factor. They don't even ask it on the application, and the VIN doesn't list it. As one respected guide sums it up, numerous variables go into policy costs, but vehicle color isn't one of them. What does move the needle? Your driving record, your car's risk and repair costs, and your location and usage. Remember those numbers. A speeding ticket can raise your price about 22%, an at-fault crash around 42%, and a DUI about 61%. In dollar terms, an at-fault accident can add roughly $1,136 in a typical year, while a DUI can tack on about $1,650. If you want to save, focus on clean driving, safe vehicles, secure parking, and shopping quotes. Simple, real, in your control. I'm Morgan Lane, and this has been Recall Roadmap with Morgan. If today helped you feel confident at renewal time, please like, share, and subscribe for more safety-first car guidance. Thanks for watching. Now that the myth is busted, what do you think really sneaks up your premium? Drop your thoughts, and I'll see you in the next one.